spring newsletter. I know I should be doing these more often, but honestly, the market's gone through such a systemic and slow change. It's sort of been hard to figure out what kind of direction it's headed. But if you did watch my newsletter from last fall, I had some pretty good predictions on there. I pretty much hit it right on the screws there, telling you what the spring was probably going to look like. So, but just to put some context in there for, really where we are with this real estate market, it's really characterized by the fact that there's not anywhere near as much selling going on. Okay, if you've been watching any of the news, you've heard about low inventory levels. So I decided for this particular newsletter to just demonstrate by going back into the time machine and looking at what the market was doing back in 2019 pre-pandemic, right? So if we go back there and we look at the number of single families that sold in the first quarter of 2019, it was almost 10,000. Well, this year, not even 7,000, which is about a 30% drop. The condos didn't drop off quite so much. They only dropped off about 16%. But the real difference, if you look at the stuff that's under 600K, you can see that for single families, we're seeing almost a 50% drop in sales. And that's simply because a lot more stuff has moved above that 600K price gap. So, and on top of that, a lot of the houses that are bigger, that are above the 600K price gap, those people aren't selling because they're in really inexpensive mortgages relative to where they are now or where they were in 2019. So the incentive for those people to move is not very strong. It's just they have plenty of house. Those houses are usually plenty big enough. And so you really need a compelling reason to shake that mortgage, which we knew we were going to see. I mean, it wasn't a surprise. I talked about it last fall that people were not going to really do as much moving. But what it impacts the most is the houses that are bigger, where you can stay put, where you really don't need to move. First-time buyers, downsizers, when they need to move, they can move, but it's that mid-market house that we're really seeing that inventory crunch. So even though the interest rates rather have really decreased the number of buyers that are out there, and they have. I mean, they've cut the number of buyers, I don't know, maybe by 80%. I think that's probably right. I think you've seen an almost 80% reduction in buyers. There's just so few houses for sale that the prices remain right where they were. We really haven't seen any sort of significant pullback. We've seen a lot less craziness. The bidding wars just aren't as fierce, and people are being more cautious and more rational when they're making offers. But there's just not enough supply to really put any pressure on the sellers that they need to reduce their prices. Having said that, now my next slide here shows that there are cracks in the craziness. And although I feel that this market is tough for buyers, I don't feel that it's crazy anymore. But we're really starting to see that the market is transitioning to what I would call a far more neutral market. It's not going to take a lot of supply for it to really be a market that's in balance. Having said that, it's still a lot more supply than we have now. Okay, I mean, to really kind of get there, we would need supply to double. That's not likely to happen in one season. We're going to need to see interest rates hold this level or higher, probably for 6 to 9 months before we really start to see an inventory build and pressure on prices. But right here in this, what I'm trying to show here in this particular graph is that if you look at all the single families that are in an area search that I just did around my little area, there's 254 houses that are under $1 million. Again, that speaks to that crunch of that lack of inventory and the lower price numbers. And over $1 million is where almost 50% of the housing is. So the midpoint there is probably 900K. But I did it at $1 million to show that the days on market for houses over $1 million is over 100 days. Okay, and so there's a lot of stuff at that price point that's just not selling anymore. Okay, or it's taking a lot longer to sell. It's getting harder for sellers to figure out where they need to be price-wise in order to sell. And a lot of sellers are out there, honestly, they're out there trying prices. Okay, if they can get $1.5 million, then they'll sell, right? But they probably know that their house isn't worth 1.5, and 100 days later, the market's telling them the same thing. But there's a lot of people out there who are listing at prices that are not likely to sell, and so that's driving up the days on market. And by the way, that's what's supposed to happen. There's supposed to be a high percentage of people that overlist, that overshoot the market and sit around a while they do price changes and price cuts. That's what puts a top. That's how real estate agents like myself figure out, what's too much, is by looking at the stuff that's not selling. It's been very hard to do that the last couple of years because everything's been selling. But if you look over 1 million, it's definitely slowing down, almost starting to look like normal. And the houses that are under 1 million, they've been on the market for 58 days. That's up about 3 times over what we saw even this time last year. Okay, most towns had averages across all prices where the average time on market was like 15 days or 18 days or something like that. So 58 days, I mean, I don't consider that normal. Normal's more like 87, that would indicate a balanced market to me. But we're getting closer. Okay, we're getting closer. So, and if you look at multifamilies, for the investors that are out there on this newsletter list, we're also seeing the days on market rise. It's at 57. Again, that's there are a few houses there that are they're just overlisted. They're way ahead of where the market is today. And I mean, they're not even trying to get last year's prices. They're trying to get 10 or 15% on top of what the prices were last year, and they're just not gonna get that. So, but still at 57 days on market, that's a very aggressive buyer's market. It's super aggressive. I mean, 100 days on market for the multifamily homes, I would consider more balanced. So we're still short of inventory in the multifamily market. We're still not seeing a lot of the buyers being super patient about prices. They're not waiting around. If they think it's a deal that they can make work, then they're making it work, and they're buying the properties very quickly. So, all right, last slide here. Just a reminder that if you're thinking of buying or selling, the areas of opportunity that I would say is if you're downsizing, this is probably the best downsizing market I've ever seen. So with the price of single families really being high, but enough inventory coming on through new builds and everything else in the over 55 segment, if you're thinking about going condo with that over 55 segment, the gap is bigger than ever. So it's really an opportunity to get rid of the big house and then trade down in size and get something that has a lot less issues to deal with. It's not for everyone. I'm just letting you know that right now that seems to be one of the most attractive things to do. If you do want to go new construction in the over 55 market, that's not as great. But stuff that's 10, 15, 20 years old, those prices look very, very attractive relative to what's going on. But I will tell you that the new construction is largely still being sold at near pandemic prices, and it does not look to me like a very good value, especially with the amount of new inventory in that segment coming on. I'm not sure those prices are going to hold. But having said that, if inventory does build, it'll be a great buyer's opportunity. I do think that there are going to be some periods of time in the next 9 months where buyers are going to have opportunities to get in there and get houses at good prices. And I like to remind people that, when the pandemic started, what really started the price craziness was that interest rates went down. I mean, typically when interest rates go down, prices go up. But what we've seen here over the last 6 months is that interest rates have gone up, but prices haven't come down. So, I mean, the reason for that is because the supply is gone. So if you can find a house now, when the interest rates finally go down, you can both refinance and you're probably going to end up on the right side of your equity situation. The house is probably going to go up in value. So we don't usually see situations where interest rates go down and house prices fall unless there are serious economic issues that are out there. And right now, even though they're talking about a recession, they're really not talking about anything like the last credit crunch, which is really the only time where we saw interest rates go down and prices go down. So that's not normally a thing. I don't think it's going to be on the table this time around. So again, even though it seems very counterintuitive because there's a lot of people out there telling you it's a bad time to buy a house, if you're not already in a house, I would tell you that it's probably a better time now than to wait for the rates to drop and all the buyers to come back. You know, you're kind of assuming that there will be inventory at that point in time, and I don't know that that's a good bet. So for all the reasons I've laid out here, I think inventory is going to remain tight for several years to come. So before we really start to see a lot of inventory. So everyone should be aware of that. All right. Have a great Easter, everyone.